Here with his insight on what's driving this boom and if there's more room to run is Chris Mancini. He's co-portfolio manager of the Gabelli Gold Fund, 4-star rated by Morningstar, and up a nice 177% this year. Have you ever had a year like that?
No,
okay.
No, absolutely not.
Did this surprise even you on some level?
It did. I mean, it did. And, it's funny because back in the day when gold was 2,000 and people would say, well, what's the best that could happen? What could happen with gold? I would say, well, if things go really well, it could go to 2,500.
Right.
It could go to 3,000, but to see it at 4,500,
I remember this. I mean, I remember writing about gold at all-time highs and people pawning their jewelry 13 years ago.
Yeah.
And then it was supposed to be the thing to hold during the 2010s. And now all of a sudden this year, why this year? And is it central banks? But that doesn't explain the rest of the metals trade.
No, right, it doesn't. I mean, I think what's going on is that the narrative has really changed. Like what we've been saying all along about gold is that it's an asset that's not replicable and it's nobody's liability. And that's why it's been the currency for millennia. And during a period of time when it was clear, when like the dollar took that role of the currency of the world, it wasn't clear as to why you should have gold. But now that we're seeing kind of cracks in the dollar, and that's partly because of what's happened with Russia's reserves being confiscated. Partly we saw with the big inflation because of all the money printing that happened during COVID.
Absolutely.
The rising national debt. So we're seeing now that the narrative has kind of been flipped on its head, and we are seeing reasons as to why gold is that currency, and I think that's what's driving the price.
Yeah, we talked to Jeff Curry about this, the other day as well, and he said it was the kind of it's the two Ds, the debasement trade and the de-dollarization trade. That's kind of what you're talking about, and both of them happening at the same time. I suppose in this uncertain geopolitical world, central banks and international agents who don't want to be subject to the dollar regime might continue to amass these metals. Debasement trade, I don't know if there's a way to discern how much longer that might go on. So what's your forecast for 2026?
I think that everything that's driven the price of gold up this year will probably continue into next year. So, it's unlikely that peace is going to break out. These geopolitical tensions are still going to exist. China's still going to be buying lots of gold because they want to diversify out of treasuries, U.S. dollar treasuries, into something that can't be confiscated because of the geopolitical tension with Taiwan and what have you. Interest rates are probably going to continue to decline. The national debt's going to continue to grow. So all the tailwinds that we had this year probably continue into next year, and it'll probably keep going up.
But even for you, look at platinum up 9%, silver's up another 9%. Copper. I mean, they always joke the cure for high prices is high prices, and that's more because you might bring on more supply. I don't know how realistic that is, but also just because on some level you get this kind of speculative fervor breaking out. I can't imagine you want that because it's going to make the whole asset class more volatile, I'd imagine.
Right. I mean, I'd say, silver definitely looks at this point, somewhat overbought. There are things going on relative to export restrictions from China relative to silver. Like you say about supply, it's unlikely. Supply really can't come online unless people do start selling their gold jewelry like they did back in the day. We aren't really seeing that. So it's like, I'm never going to argue with high prices, considering that we manage a gold fund. But I think gold has been pretty orderly. The silver trade's been maybe that's a little bit overextended.
Yeah.
But gold's been pretty orderly, and we'll take it.
So I'm at a New Year's Eve party, which I won't be, but let's pretend that I am, and people are talking about this. And I say, I heard this guy on CNBC, and he had this great idea for how to play it for 2026. What would that idea be?
Well, I do think that the gold stocks are very cheap. So our biggest holding and the biggest gold mining company in the world is Newmont. Very diversified, but in good jurisdictions in terms of where their mines are. But I have them next year at current metals prices generating around $10 per share in free cash flow. The stock's trading right now at around $105 a share. So it's just one example amongst many of companies that are cheap. So with a gold mining stock, you're getting the gold in the ground, you're getting exposure to gold, but you're also getting that income from the free cash flow that the companies generate. Is
it true that these companies are not always the best stewards of capital over the long run, or the cyclicality of the business often undermines long-term holdings? But even if, I don't know if you would agree that that's true, even if it is true, does it matter right now?
Right now, I would say no. That's a very good point. And what I would say is that in the past, they haven't been good stewards of capital. But now, they've been burnt so much since I've been doing this around 18 years. They've been burnt in 2 cycles. One of them was by their own doing in the 2010s. The other was during COVID when mines had to shut down, things like that, social whatever, because of all the social distancing and stuff like that. So they've been burned twice in the past 20 years, and they are very, very conservative now.